Good evening. Ira Epstein with your SPDR ETF wrap-up. And this wrap-up is for mid-month. We're at February 15th, 2022, about 7:15 at night. Interesting day. We wake up to the news, of course, that some Russian troops have backtracked. They call it a retreat. I don't know if it's a retreat, but they were pulling them back from the line. And I guess that the more I read, I found out that within Russia, the housing for those particular troops were not far away. So don't know if there's a rotation going on or what. Other troops had been moved up in the past 72 hours, so you can afford to take some away. What was the sign? Probably a sign for Chancellor Schloss that came over from Germany that we can be good, we can back away, we can do this, we want to be diplomatic. But you got 130,000 troops surrounding Ukraine. You got the sea blocked off with 30 battleships doing live exercises. He's got all the power he wants. And if you think this KGB person, the President Putin, put all this stuff there to just walk away with it, doesn't make sense to me. I'm not a military analyst, but I don't see what he got so far. There's got to be an end game. I still think it is that the Ukraine takes away in their constitution that they have to apply for NATO membership. They're probably never going to get it anyways. And that they agree to not have NATO missiles stationed in their country. Now, does that take away their sovereignty is how you have to wonder what the people think. At the same time, Russia's parliament got together today, and there's two sections, I think it's eastern Ukraine, close to right on the border with Russia, and now they want to, I'll use the word annex, but they asked permission of President Putin about it, and obviously, at first we thought this might not happen today, but they decided to do it. I don't know where that's going, because that gives them pretense, well, yes, that is part of Russia, let's go get and free these people. You figure it out. Here's the thing that's hard. You go to bed, you wake up in the morning, and the world's different. And it's been that way now for about a week. I think you realize it. The volatility is insane. And what you think is logical isn't logical. And that's typical at a time like this. It doesn't last forever. President Putin cannot keep those 130,000 troops there very long. It costs too much money. So he's either going to do something with them or he's not. This man's got the ability to do whatever he wants. He plays the game better than those around him. So when we take a look at what UUP, that's what I decided to do. This is the dollar bullish fund from Invesco. And this is the weekly chart. Until the market now takes out 25.48, you have a pattern of higher lows, higher highs. The support is the combination, two moving averages, of the 200-day average in this light gray and the red line. You see them right there. And if you take out 25.48, you reverse the trend back down, and the market probably tries to go to the 100-day and over here. So it's in a very interesting spot, and that's the weekly chart. This is what the daily chart looks like. I'm only going to show it for 7 days, and I thank all of you for writing. A lot of you did. Some of you wrote me by email. Some of you put it out on the YouTube. And I decided to pick this because we keep talking interest rates and what are they going to do for the dollar, because they're going to impact the dollar. You can count on that. When we look here, we see that we have a lower low and a higher high. So we're not trending. We see that the market held very nicely. Two key numbers here. It held once here and here, the 100-day moving average. So even if the market breaks from here, you've got to consider that's a big support area, because until it's broken, that's what it is. And the neutral zone is the 18-week average of closes while you're not trending. And the Bollinger Band, if that gives ground, that's your next target at 25.42. Whereas if you take out the highs of Monday, this is today, this is Monday, that number is 25.82. Well, that gives you then higher highs, higher lows if that occurs, and you open the door up for the 2600 level on the chart. Momentum is flattened itself out because the market settled under the 18-day average of closes. The bias is down. So the chart's right now, and that's why I picked it. It's trying to make its mind up, and we'll try to catch it here as it decides what to do. In Apple, as I told you, when it fell back to the, and I said this yesterday, now that you're back at the 18-day average, that's the neutral spot on a chart. A market that comes down like this often goes back to it. Markets that go up, this is a great example here, come down and try to figure out. That average is very important. Yes, you can go right through it like it doesn't exist. Most times you won't. So coming there is like saying, what do we do here? And that's basically what's going on. You're overbought at that number. Now, if you go to XLF, you're back in your uptrend. You have, with today's action, higher lows, higher highs. I think the pros will buy this market, and I don't think they're going to give it any quarter at all. In fact, I think they're going to give it, if they buy it at the 39.44 to 51 level, I think if it gets under, right here, yesterday's low of 39.33, they'll say, I'm out. I don't want to own it. If it rallies, up here could be a target. Is it an ideal trade? No. Why? Because you're still in an area here where one of the numbers is over 70. It's overbought. So I think that it's nice to talk about it, but I don't think it's doing a lot. In Disney, I'll let somebody else want to own that. You know, I don't like buying an upper Bollinger Band or selling a lower one. It doesn't end well. That's typically what happens. It's the prelude to a bad ending. I am not bearish. I just don't think it's going anywhere yet. Do I think it is down the road? Oh, yeah. I think people can't wait for the spring to get to Disney parks. I don't think that Disney's going to lose subscribers by very much for the kids that are out there that want to watch the Disney Channel. I think they got a great product, okay? I've told you that before. I love the company. And, you know, they're fighting their battles, but I think that they're there. But they're overbought and they're in a resistance zone. In the industrial sector, the short covering day was yesterday. Let me explain this. If you've taken my enhanced Bollinger Band course on our website, you learn how to work with these. First day you hit the Bollinger Band, you're not embedded. I think the pros took all the money off the table. Now, are we trending? Yeah. Where's the resistance? Back at the 18-day average, you're not oversold. Stop over that high, and maybe you come back down for those lows again. So today you got up to that number. We'll see what tomorrow offers. XSD, uptrend. Higher lows, higher highs. What's this reading? Over 71. I wouldn't tell a trader to buy anytime you're over a 70. But let's assume it follows through anyways. Upper Bollinger Band, black line to the 100-day average, the resistance. If the market fails, you got to get back under this low right here, which is what? This right there. That's the day I want. That was a 196.19. That's what you'd have to take out. The home builders. You got interest rates going up. I don't know how homes are selling in your area, but I'm not seeing a move in the Chicago area very much, although it is cold here. And I had a friend that called, and he's got his home up. He thinks it's worth a good condo, a really pretty one. And they're not getting any bids yet. So I told him, I said, well, look when you listed it, February. But lower highs, lower lows, and the market oversold. Okay. But there's nothing friendly on that chart, and nothing can get friendly right away. In the energy sector, we smelled this one. If you lose the embedded reading, and I said that last night, you probably go back to the 18-day average. Pretty cool rule. You'll discover that in some of the courses that I teach. In GLD, what do you do the first time you hit an upper Bollinger Band? This is not stuff that I'm telling you after the fact, like bad. As it was going there, these days, go listen to those tapes. I said, that's where the pros take money off the table. And I realize everybody's going to tell me, Ira, you're out of your mind. Ukraine is going to be invaded. This market's going crazy. And that's fine. Now you're down again in the market. Okay. That doesn't mean that you can't buy it under your conditions, but you don't buy Bollinger Bands. GDX. Do you really want to tell me that you're going to go through the 200-day in that? You could, and I'm certainly going to believe you, but not Ira telling his clients, is paying clients to do that. I'm telling them take money off the table. And I did. XME, embed. Baby, embed. This is one that I want to see that happen. Both numbers are over 80. Both numbers the day before over 80, not the day before. Tomorrow's a crucial day in this. If it embeds, it turns on, suddenly the market's not overbought, and it's saying, come in, baby, start buying me. And until it isn't good with that red line closing back under 79, you're buying the breaks in the market. So you're waiting for the signals to kick in. I was asked today on Sky Business in Australia. Yesterday I did Canadian TV. What were my favorite trades right now? And I said copper and jet fuel. I'm betting that come the spring, everybody's out wanting to do things, industry's going to go, and I'm betting that you're going to get big demand on jet fuel. People want to fly and go away. They want to go back to Europe out of America. Europeans want to come here. People want to travel. We've had 2.5 years of nothing. They want to travel. You watch. So, could I be wrong? Of course. I remember I'm the Swiss cheese guy. I'm often wrong. But that's what I think is going to happen. TLT. You're not even thinking the long side on interest rates. So you're embedding. You're trying to embed, right? So we take a look. Did it embed here? Market closed with a 2088. That's not over 21. Falls right back. You got to have your rules. 20.88 is not over 21. And you get the last minute or two to look at the market. You got your electronic trigger thing. You're not calling a broker. Boom. You know what to do. It's not that hard. FXE. I'm looking for this market to find support here right now. And if it does, that's the reason the dollar, I think, is stalling out. And that's why I wanted to show it, because I think it's going to get interesting in the dollar very shortly. In the mornings at 9 o'clock, I start recording, just so you'll know, and I review 40 some odd charts for my paid subscribers. And I do that Monday, Tuesday, Wednesday, Thursday, and Friday morning. And on Saturday, sometimes Sunday, I go in and I take those exact charts, but I look at the weekly ones on them. And I give you the longer term picture to work with. We also give you our device that you can put on your Android or smartphone. I rotate what we're doing, just the way you see me doing it now. There's going to be 40 in here. So I'm just giving you a basket there of what you've got, some ideas for. It's not expensive. I do it also in such a way you don't have to look at the whole thing to see where you're at. There's a slide bar on our website. As you pull it through in big letters, it tells you, oh, look where he's at on that. He's in the metals. He's on the interest rate sector. He's on this. He's in his stock sector. It tells you where you're at. Give it a try. Go to our website under the word research. Just sign yourself up and away you go. You can stop at any time. You do it right on the website. I'm Ira Epstein. You have a great day. I will talk to you all tomorrow.